taking your time. So yeah, this is my chart. So this is the reason I won't be using my chart. Just a minute. Yeah, you can see why I won't be using my chart. But anyway, moving on. So basically, when you log into your MT4, when you've downloaded your MT4, you've logged in your details. This is what you have. This is what you get. Okay, so not exactly this because I tried to remake it, but you'll get 4 charts of Euro USD, GBP USD, USD GPY, and USD chef, but they have so many lines inside them. So what we call these lines, basically they're indicators. Okay, but for now we know I will advise you not to use any indicators. At this point, you're still trying to learn, so I'll advise you trying to find the shortcuts and trying to learn so much at the same time. So the first thing I'll ask you is to close all these 4 charts. See, so the moment you have the 4 charts, you close them. Then after that, we need to reopen these charts. Okay, so the first thing, okay, so we need to open new charts of the 4 currencies. For now, I'll advise you to use the 4 currencies. You can take notes. So the first one you're going to use is Euro USD. You need to find Euro USD. So this is where you find your charts. This is where you find the currencies. This is where you find every single pair that you're looking for. Okay, for most of you guys, these charts are usually limited. Okay, so what you need to do is, the first thing, you're going to left click. Okay, yeah, right click on this. Just come to any part of this, right click, then show all. The charts are usually limited, so they don't give you every single currency, but once you show all the currencies, it will show you all the currencies that you need. Okay, so you'll just need to come here and find, okay, we can start with Euro, USD JPY, US dollar versus the Japanese yen. Okay, so the first thing, you open the chart, or you just click on the chart window. Okay, there, then it appears there. So the other way to do this is, you just come to this box you see here. So you just click on it, then find the currency you want to trade. So we have the USD chef here. What else can you find there? Let's just look for these currencies. We also have, I'm trying to get the major currency. So Euro USD, you guys can spot it. Yeah, here it is, the Euro USD. See, so then we have the GBP USD. Okay, yeah. So once you open the 4 charts, you need to enlarge them. The first thing is, you just enlarge the charts. Okay, so that is the first step. That is the first thing you have to do. Okay, so I know you guys can relate when I talk about the base currency and the counter currency. So this is basically what we mean by the base currency. You can look at the USD JPY. Okay, so the USD is the base currency and the JPY is the counter currency. Okay, when you come to this, is how you change your charts, by the way. See, when you want to go to another chart, say USD, you can see the chart is totally different from the other one. Okay, so the first currency is the base currency, then we have the counter currency. Okay, these are the prices, this is the price. Okay, so when it comes to the prices, see this white, okay, how do I put this? Basically, this is showing you the current price in the market. When you see the prices are up here, it shows that, okay, basically the prices are above there, then they drop to this point, and right now they're trying to buy at this point. I hope I'm making sense. So yeah, after that, what else am I saying? So after that, the next thing we're going to look at is the type of charts. In the forex market, we have several types of charts. So the first one is the bar charts. Okay, then we have the candlesticks, and then we have the line charts. I'll just click on them so that you can see. This is the bar chart, so you can zoom in. This is the zoom in and this is the zoom out. So you zoom in to have a clear view. This is the bar chart. We have the candlestick, then we have the line chart. Okay, you can see the difference, but in Forex we're going to focus on the candlesticks. We're going to be trying to understand what the candlesticks talk about, what the candlesticks are. We're going to be generally analyzing the markets using the candlesticks. Okay, because you'll find that the candlesticks are very crucial. They give us a very big, how do we say this, they give us a lot of information when you're looking at the candlesticks. Okay, then after that, okay, this is basically how you do it. You just go to your chart, specifically go to a certain chart, then you change it to candlesticks. That is always the first. Then you zoom in to a view that you can see. Okay, yeah. So moving on, you need to understand one thing. Each candlestick is a representation of something. A white candlestick is basically telling you the market is moving towards a downward direction. A green candlestick is moving towards an upward location. Okay, so what you need to understand in this is that when you're trading, you don't just focus on one candlestick, you focus on accumulated candlesticks. Okay, so the other thing you need to understand when it comes to the charts is how the candlestick forms. Okay, so when a candlestick forms, you can look at this. Hope you will be able to see this. This candlestick has a line, there's the body, and then we're supposed to have another line, but this is a symbolic candlestick for that matter. But you can see from the others, we have the upper shadow, we call it the upper shadow, we have the body, and we have the lower shadow. Okay, you can call them tails. This is a tail, this is a tail, and this is a body. Okay, so you need to understand these candlesticks. You need to understand how they're formed before you take any other step. So if you've not done that, you should take time and just go back and focus on them. Okay, so the other thing you need to understand is that we have the time frames. The markets just don't move. There's a candlestick that will be formed within that day. Once the market day closes, once today ends, there will be a candlestick formed for USDJPY. You get, within the next 4 hours there will be a candlestick formed. So basically what I'm trying to say is that we have time frames when it comes to forex market. Okay, so the first thing, we have the 1 minute. What we mean by 1 minute is that each candlestick formed is a representation of that 1 minute. Within this 1 minute that we've been talking, this is the candlestick that formed. Okay, then we have the 5 minutes. 5 minutes, what we mean by 5 minutes is that within the 5 minutes that we've been talking, this is the candlestick that formed. Am I clear on that? So 1 minute, 5 candlesticks that represent 1 minute will form 5 minutes, and you can guess the relations. Okay, so we have the 15 minutes. Each candlestick, when you click on the 15 minutes, it simply means that each candlestick being formed is a representation of the last 15 minutes. Okay, so in Forex we have 1 minute, 5 minutes, we have 15 minutes, we have 30 minutes, we have 1 hour, we have 4 hours, we have 1 day, we have 1 week, and we have 1 month. So basically what this is telling us is that the market, we need to have a bigger view of the market from a bigger perspective to be able to analyze the market as it is as of now. Okay, so what we'll come to figure out is that in Forex we usually refer to the history to determine the future. Okay, so we usually say that the past will determine the future in Forex, or history repeats itself. So that is basically it. So when you're analyzing a Forex market, you need to first understand what the markets did in the past. Okay, then you need to understand what is the market doing today before you make any other step. Okay, then we have the traders toolbar. This is basically the traders toolbar. The traders toolbar will show your balance, then it will show your equity, then it will show your free margin, basically the balance is what is in your account. Okay, the equity, once you make a trade, once you take a trade, once you buy or sell, the market is very simple. The market will either go upwards or it will go downwards. Hope this is clear. So once you sell, what is meant by sell? You expect the prices to drop. What is meant by buy? You expect the markets to go up or to gain in price. I hope that is clear. So basically, the equity will show what once you have an open trade. Okay, so when you close the market, it will reflect in your balance. Once you have an open trade that is in a loss, your equity will show minus the loss that you're making. Once you have a profit in that trade, it will show in balance as plus, or equity balance will not be affected yet, but once you close that trade, that is when the market will be affected. Hope that is clear, guys. So the other thing you need to understand is the account history. Basically, this will show you all the trades that you've executed. It will show you all the trades that you've taken before. Okay, we have the exposure. It's not that important for now. The account history, I'd recommend that you use your phone to determine the account history. Okay, so the other thing you need to understand is we have the news. Okay, the news that are sent to you by the market, the news that will affect the market during the day and during any other time. I'll send you an application after this immediately so that you can figure out how you can look at how the news affect the market and everything else. Okay, I don't recommend using this, so I'll send you the application immediately after this. Yeah, I hope you've had a good time. That will be all for now. The next video I'm going to be talking about how to execute your first trade, and that will be shortly. That will be short and just accurate, so I'll try my best to do it as soon as possible. Yeah, you guys have a good time, and I wish you all the best.